Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about UMB Financial CORP quarterly report. UMB Financial Corporation offers a wide range of businesses and services across three main segments: commercial banking, institutional banking, and personal banking. The commercial banking segment provides commercial loans and credit card services, as well as specialized business solutions such as asset-based lending, mezzanine debt, and minority equity investment. It also offers treasury management services including depository services, account reconciliation, cash management tools, and electronic payment solutions. Institutional banking offers banking, fund, and asset management services to institutional clients, including fund administration and accounting, investor services, and alternative investment services. This segment also provides healthcare payment solutions, including custodial services for health savings accounts and private label debit cards. The personal banking segment offers a variety of deposit accounts, retail credit card services, private banking, installment loans, home equity lines of credit, and residential mortgages. It also provides internet banking, ATM networks, brokerage and insurance services, investment advisory services, trust services, and custody services. Overall, UMB Financial Corporation's diverse range of businesses and services caters to both individual and institutional clients, making it a comprehensive financial solutions provider. The stability of UMB Financial Corp's stock price over the past year can be attributed to a combination of factors. The absence of major unexpected news, anticipated news, and market stability have all contributed to minimal stock price movement. Additionally, neutral analyst ratings or coverage and the absence of significant economic shifts have also played a role in maintaining the company's steady performance. It is challenging to pinpoint specific news that led to no significant change, as financial analysis often focuses on events causing notable fluctuations rather than those with little impact. The primary drivers of revenue growth or decline can be identified through a review of the financial summary. Revenue growth is primarily driven by net interest income, non-interest income, acquisition of HTLF, increase in loans, and decrease in allowance for credit losses. Conversely, revenue decline is attributed to net charge-offs, non-performing loans, general economic conditions, collateral-based risk, volatile commodity prices, and adverse weather conditions. In specific areas, commercial banking has seen significant growth in both net interest income, up 90%, and non-interest income, up 31%. Institutional banking has also experienced growth, with a 30% increase in net interest income and a 15% rise in non-interest income. Personal banking has witnessed substantial growth, with a 124% surge in net interest income and a 74% increase in non-interest income. However, trading and investment banking have seen a decline of 1.3% in Q3, while insurance fees and commissions have experienced a 19% drop in YTD. Net income and profit margins. A shift in favor of growth, the company's net income has experienced a significant increase over the past year. For the 3 months ended September 30, net income rose by 71.6% from $109,643,000 in 2024 to $188,316,000 in 2025. This trend continued for the 9 months ended September 30, with an increase of 52.1% from $321,246,000 in 2024 to $487,043,000 in 2025. Profit margins have also undergone changes across different segments. The commercial banking segment saw a notable increase in profit margin to 53.6% in 2025 compared to 45.8% in 2024. Conversely, the personal banking segment experienced a significant decrease in profit margin to -9.7% in 2025 from -3.5% in 2024. The reasons behind these changes are multifaceted. The increase in unrealized gains on debt securities and decrease in unrealized losses on derivative hedges have contributed to higher net income. Additionally, the rise in net interest income due to higher earning assets and net interest margin has positively impacted earnings. However, the provision for credit losses increased due to loan growth, portfolio credit metric changes, and macroeconomic metrics, which may indicate a potential risk factor. Overall, the company's financial performance indicates a shift towards growth, driven by various factors that have contributed to an increase in net income and profit margins across certain segments. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. In 2024, the company generated an operating cash flow of $292,157, which increased to $920,616 in 2025. This increase suggests that the company is becoming more efficient and effective in managing its day-to-day activities, ultimately leading to a substantial boost in positive operating cash flow. The company's debt level and interest expenses have undergone significant changes in recent years. In terms of debt level, the long-term debt has increased from $385,292 to $471,331, a 22.3% increase. Total liabilities have also risen from $46,943,123 to $64,437,231, indicating a substantial growth in the company's debt obligations. Conversely, interest-bearing due from banks has decreased slightly. Regarding interest expenses, there has been a notable increase of 30.6%, rising from $310,318 in 2024 to $403,855 in 2025. However, net interest income has seen a more substantial growth, increasing by $227.7 million and $607.8 million for the 3-month and 9-month periods ended September 30, 2025, respectively. Overall, while there have been increases in both debt level and interest expenses, the company's net interest income has experienced significant growth, indicating that the increased costs may be offset by higher earnings from interest-bearing assets. The financial performance of the bank's various segments reveals a mixed picture. Commercial banking stood out as a strong performer, with significant increases in net interest income 96.9%, non-interest income 78.7%, income before taxes 88.8%, and net income 85.9%. On the other hand, bank card fees were a notable underperformer, with expenses of $13.1 million in 2025 and $10.2 million in 2024 related to rebates and rewards programs. In contrast, insurance fees and commissions, as well as brokerage fees, showed strong performance. Management is emphasizing a strategic approach to mitigate risks through diversification of loan portfolios. They aim to balance return on investment with liquidity goals, while managing exposure to interest rate fluctuations through asset liability management and hedging strategies. This approach enables effective risk analysis and mitigation, ensuring the company's financial stability. The company has a history of rewarding its shareholders through both dividend payments and share repurchases. In 2025, the company paid out $0.40 per common share as a cash dividend, demonstrating its commitment to returning value to investors. Additionally, the company has also engaged in share buybacks, indicating that it is actively managing its capital structure and prioritizing shareholder wealth creation. That concludes the financial summary for UMB Financial CORP. Feel free to comment below, and I will be happy to answer them when possible.